Okay, I've advanced the market a little bit further. It's out now actually about 15 minutes after New York Open. And what you'll notice here is on the 15-minute chart, we've now pushed down consecutively for 3 candles without any significant retracement. So this is a key thing to keep in mind, is that you want to look for points when you're looking for a reversal. You're looking for extreme emotions that have become unbalanced to one side or the other. And the only way for that to happen is for the market to move essentially in as close to a straight line as possible, with very few opportunities for the other side to get in there say so. When you see that type of activity, that's when you know that there's a good likelihood of a reversal. There's a couple other things that I'm looking at that also appeal to me. One is that we are sitting now around our previously identified support area, which was actually drawn days, if not actually weeks in advance of this move. So you can see that we've now moved down in this stair-step fashion. We've pushed down again, and based on the market action that we're seeing here, there's a good likelihood for reversal. The other thing that I like is I like the fact that we've moved in this series of consecutively lower highs and lower lows, but what's starting to happen is we're starting to get into a very tight channel where you don't really see as much. The first initial break was a pretty good push of about 15 or 20 pips. You did the same thing on the second push, but then what's happened is these third and fourth pushes down have become consecutively weaker, and the bears are at this point making very little progress. There's not a lot of enthusiastic activity at this point, and that's what you're looking for. You want to see those emotions becoming exhausted before it's time to play a reversal trade, and so keep those things in mind. This isn't so much a matter of mechanics, it's a matter of identifying the emotions on the chart, based on what you're seeing. And I think this is a key component a lot of beginning traders in particular tend to take for granted or tend to ignore. They want to look purely at the mechanics of a trade setup and not on the merit. So you can see we've now had a valid bounce, our classic candle that opens above the middle of the previous candle, and I'm going to advance this forward. So what am I looking for in terms of a target? Well, what I want to see ideally is I'd like to see us penetrate the last 2 resistance areas. This to me shows that we've made some sort of a meaningful retracement, and when we've done that, that's when I'll know that the trade is good. Now, you may notice from some of my previous trades taken during the weeks that you'll see that not all the time do I get in at perhaps the exact exhaustion point in the trend. So one of the things I always do, this is not an averaging down sort of situation in the sense that most people think of it is I'm averaging in. So if my full risk size is, say, 3 lots, then my first position will be for 1 lot, as you see here, and then my next position would be for 2 lots, so that when it gets to that exhaustion point, there's a very high probability of me turning profit at that point. Do I have an eventual stop loss? You bet. I've got my stops in there. They're a little bit wider for these reversal type trades because sometimes you've got to let the emotions go for a little bit before they're going to see a retracement. So you have to think about that, and in the context of what you feel is comfortable for your risk management, and keep all of those sort of things in mind. So the market may continue to test another low down here, and this is not one of those times that you want to be thinking about getting out. You can see that you're not always going to have the perfect entry per se, but if you wait for the emotional weight to eventually catch up to the market, it typically will, and that's what's putting the probabilities on your side. So, and this is a lot of sideways choppy action, and this isn't really proving anything one way or the other, and a lot of people tend to get impatient here. But notice how we're starting to form, if you're familiar with patterns, a certain triangle pattern, which is fairly bullish. And that's one of the things we're seeing here. We're seeing resistance is constantly being challenged. Support is becoming more and more shallow. These are all things to me that suggest there's a great deal of evidence that we will break to the upside and see a meaningful retracement here. So this is one of those times where a lot of patience is required, and we've been in the trade now for 15 minutes. A lot of people would have gotten impatient with this trade. They would have, wanted to hop out for a little bit of profit. You can certainly do that. It's not a big deal, except for that you can't eat like a you can't eat like a bird in this business. You've got to make sure that when the profits are on the table that you take a piece. So we've just about reached our 15 pip target. Keeps hopping back and forth between one pip and another. Close enough in my book, and I think we've seen that meaningful retracement here and popped. We might go back in, or we might continue on. So that's what I've got for you today. So the main thing that I'd like for folks to take away from this video is I want you to think about context. There's a good reason that a lot of successful traders use multiple time frames, as I'm doing here, to set up the context of their trade. You want to think of candles as other people's emotions. If you can recognize how you react by seeing certain things in the market, that's a good way to anticipate how other traders are feeling. So if you feel disappointed that you missed out on a move, or if you feel frustrated that as a bear, say when this breakout doesn't materialize to be much of a big trade, all of those emotions that you can identify, start thinking about the other side of that trade. Start thinking about what the professionals are thinking, which is they're trying to see the emotions on the chart and find opportunities. And if you can do that, then that's where the success comes from. It isn't from moving average crosses. It isn't from some mystical indicator out there that you're not aware of. It's simply emotions.